And hi, everybody. Glad that you could join us. Today, I'm just going to be talking about financing your business mostly under normal circumstances. So things like how does an SBA loan work, what lenders are going to be looking for in successful loan applicants, and that type of thing. But first, I just wanted to do a plug for our office Twitter account. So if you follow me, it's at SBA_Nebraska. I do tons of posts on upcoming workshops, webinars, all kinds of interesting kind of real-time information. So if you're into Twitter, definitely follow me. I'm a super Twitter fan, so I would love to get more followers. And just a little bit about us. We are the only federal agency that's 100% dedicated to small business ownership and helping small business owners and entrepreneurs to start, grow, expand, and recover their small businesses. And we are we'd like to think of ourselves as the primary go-to resource and the voice for small businesses everywhere. And we're not going to talk about these loan programs in depth, but because so many things are focused on COVID-19 resources right now, I did want to bring them up in case you are a small business owner and you were not already aware of these programs. The SBA does have an economic injury disaster loan that is available now to all eligible small business owners and all eligible nonprofits. There's some information on that on the screen, and if you need more information, please feel free to reach out to me either via the chat or afterwards. I'll put my email up there so you can see just the basics about this. The one thing that I want to mention is if you do think that you need this, do go ahead and apply right away. There are a finite amount of funds available for this, and it is on a kind of first serve, first come, first serve basis rather. So definitely apply for this now if you're interested. Part of this loan is an idle loan advance, and that is based on the amount of employees a small business has. So if you have one employee, then your loan advance would be $1,000. If you have 8 employees, it would be $8,000, up to 10 employees for $10,000. That portion of the loan does not need to be forgiven. That's basically a grant for your small business. This is a working capital loan, so you can use it for payroll, rent, utilities, paying your bills, just everything that you need to do to get your business back to pre-COVID disaster levels. Under $25,000, you don't have to have collateral. Over $25,000, you do. So there's just some basic information about that. And again, if you have any questions, please let me know. There is a long deadline for this, but again, if you are interested, I would highly suggest that you apply like literally today. There's millions of businesses applying for this. I'm sure most of you, if not all of you, have heard of the Paycheck Protection Program. This loan is only available for about another week and a half or so. The deadline for applying for this is June 30th. This loan is designed really specifically to be able to keep your employees on staff during this time, be able to keep them paid so that they don't have to file for unemployment. It's a 2 to 5 year loan, depending on what time you applied for the loan, 1% interest rate. It's fully forgivable if at least 60% of the proceeds are used on payroll, and 40% or less can be used on only mortgage interest, rent, and utility payments. So this program is much more restrictive than the other SBA economic injury disaster loan, but the PPP is forgivable, whereas the economic injury disaster loan is not, except for that initial small business grant. So if anybody has any questions on that, please feel free to reach out and I will help you with that. Okay, so talking about financing your small business under regular circumstances, whether you're in business or just starting, we highly suggest that you contact SCORE. SCORE is statewide, so if you are not in Omaha, I can give you the other chapters information. But these folks are great. They can actually help you write your business plan. They won't write it for you, but they will definitely help you put it together, give you some thoughts, help edit it, all those types of things. Totally free. You can see them as many times as you'd like. And their website, score.org, it's the national website, has a ton of great information, including business plan templates, all kinds of webinars, online workshops. It's just a huge library of resources there that you can check out, many on financing. So if you haven't taken a visit to that website, definitely do that. And then there's contact info on how to get in contact with a mentor here. And again, all free of charge. Once you've put your business plan into place and gotten it to where you're ready to do some in-depth work on the financials, that type of thing, we suggest that you contact the Nebraska Business Development Center. They can actually help you with market research, with putting that portion of your business plan together, with running the financials. They're very familiar with how to package a small business loan. So they're a really good resource for you when you reach that point. Everything you do with them is also free. They are statewide as well. We have one here in Omaha, and then there's a number of centers throughout the state of Nebraska that are tied to colleges and universities. So there's their contact info. Definitely become their next best friends if you have not already taken advantage of their free services. Likewise, if you are in greater Nebraska, we do work with the Rural Enterprise Assistance Center, specifically with the Women's Business Center and the Latino Business Center. They offer all kinds of technical assistance, under normal circumstances, one-on-one, but now they're doing things over email, Zoom, phone, that type of thing, just because of COVID. But they can help you with your business plan too. They're also a microlender. So if for whatever reason you are not able to qualify for either traditional financing or an SBA guaranteed loan program, and we'll talk in a few about what that is. A microloan is pretty much your kind of last option, and we'll talk about what a microloan is, but these tend to be much more lenient and available, again, for small business owners that can't get traditional financing for whatever reason. So definitely check them out as well. So just a quick thought here on different financing sources. These aren't any, revelation. Everybody kind of already knows this. Entrepreneurs tend to start a variety of ways. Credit cards are very popular, borrowing from your friends and family. A lot of folks seek traditional financing, microloans, that type of thing, and just be thinking about what might be best for you. We hesitate to tell people to use up, the credit limit on their credit cards, because that can really get you in trouble. Likewise with borrowing a great deal of money, because if your business doesn't really take off or it doesn't expand the way you thought you did, the way you thought it would, then that can lead to some trouble down the road. So really spend some time thinking about the pros and the cons of each of these different sources. Make sure it's the right choice for you. These are kind of the breakdown of the way that folks do. A lot of folks tend to pull on their savings. If you were in the military, you can use your TSP for this. Again, one of those things we don't highly recommend, that you kind of stay away from that, or from your retirement funds, again, just because things might not work out the way that you're hoping that they would. A lot of times they do, of course, which is awesome, but to be completely realistic, a lot of times it won't, and you do want to still have funds in your retirement accounts so that you can do, other things if a small business is not really going to work for you. So that's just some information from the Kauffman Foundation there of how most people tend to start up their businesses. So when you are looking at the different sources of financing, it's really important that you spend a lot of time assessing your current financial situation and that you look at your future revenue. Lenders are going to want to see 1 to 3 years of future projections. This is probably the hardest part of your business plan, because as a new entrepreneur or a new business, and even if you're going into some sort of expansion phase, you really don't know what those numbers might look like. So again, our resource partners can help you kind of put that together. If you're a new business getting financing, it's really important to be realistic about your sales and expense expectations. People go into businesses thinking that they've got the greatest product and the greatest service ever. And you do, maybe you do, but that doesn't guarantee that there's going to be customers, lined up out the door for your services or your product once you actually get open. Franchises can help with that because those are existing businesses and they have that built-in brand recognition and that type of thing. So that's an option you can also think about. But even if you're buying somebody's business and keeping their customers, there's no guarantee that those customers will all stay. So basically, don't feel like you're going to go out and make $1 million overnight. Definitely be realistic. Think about what you need. Are you starting? Are you buying everything? Are you just trying to get a working capital loan as a cushion against risk so that you still have some money in hand for things like emergencies, or if a piece of equipment breaks, something like that? And is it long-term or short-term? The SBA has both kinds of loans available as well as lines of credit. So figure out what you're needing for that. And in your business plan, you're also going to need to put a detailed use of capital. So that would be obviously what you're planning on doing with the money. Typically, you're breaking that down by, you know, the first year or the first quarter or whatever. It's going to be this amount and then this amount and then this amount. So you'll want to be very specific with that because your loan officer will likely have questions about that. You also want to think very carefully about the control of your business. If you are a sole proprietor and you start your business, you know, you're in 100% control. You are the owner. You're calling all of the shots. And that's great for a lot of people. That's what they want. If you don't want full control and you bring in a partner, then maybe it's 50-50 that you have control over and you're doing everything in concert with a partner. Now, if you ever want to get into federal contracting, it's very important how you define that partnership. It needs to be typically 49% to 51% so that the majority owner, if the owner is a woman or a minority or a service disabled veteran, there's some benefits to having that individual be the 51% owner. And again, we can talk about that offline if you want more information on that. And then again, if you decide you don't want debt, you want to bring in investors, again, you're going to be giving up some control of your business there. We'll talk about this more later on here, but you do need to be prepared for a down payment. It's not like buying a car. There's really no such thing as 100% financing. So you will have to put down a chunk of money. You will be pledging collateral and you will have to give a personal guarantee. A lot of people are under the misassumption that because it's a business loan, you don't have to personally guarantee it. You do because it's you signing the loan. It's for your business as an entity, but you are still required to put down that personal guarantee. That trips up kind of a lot of folks, so just keep that in mind. And then also, you want to know your credit score and your credit history and know this before you apply for the loan. There's nothing worse than sitting down with a mortgage officer or a loan officer looking at your ability to get a loan and there's some big surprise that somebody owns a house in your name or somebody took out 5 credit cards in your name that you didn't know about. So you want to know that ahead of time. So this is kind of the basics of what goes into a business plan. There's no specific format that you need to use, and these are just elements that you really should be including. It doesn't have to be in this order. It doesn't have to be those headlines. It just needs to have all of this information. And we're going to focus specifically on financials. So a lot of this is really pretty obvious, how much money, that you need to get started. And that's all inclusive of everything that you're going to need. That's payroll, buying inventory, buying the building, rent, whatever the breakdowns are. Your future requirements, it's good to know 3 to 5 years. Lenders, again, will ask for 1 to 3 years of that. You want to describe what your funding is going to be used for. Is that going to be working capital, which again would be things like rent, payroll, those types of recurring expenses that you're always going to have. Equipment, and then if you're doing a build out or buying a building, those types of things. Even though you're just beginning your expansion, it is a good idea to be thinking about your future plans. If you have a partner, what's your exit strategy if one of you wants out? Are you doing a legacy business, something that you want to pass down to your kids? Or do you want to just be doing your business for a couple of years and then selling it? When you're thinking about financing and you're thinking about putting together that business plan, do keep those kinds of things in mind because you want to know what your end goal is as well. You need to list out your break-even point, your fixed and variable expenses, and include 1 to 3 years of that historical data if you have it available. So if you're buying a business, definitely check out their historical data, profits and loss statements, all those types of things. If the business is reluctant to turn that over to you, that's a huge red flag. So I would definitely suggest that you investigate that further. And there's some good financial projections templates that can kind of help you put all that together on SCOR's website. So here's that example of fixed costs and variable costs. Again, this would all be identified in your business plan. It all goes into how much you overall want to, or how much financing overall you need for your business. So we're not really going to spend any time on this necessarily. I just wanted you to be aware of the breakdown between those. And again, this is your break-even point. Again, it's just how the volume of your sales revenue, what you need to cover all of your costs over a given period of time. So that's just kind of a breakdown for you. And this is probably the most essential thing that you need in terms of your calculations and your costs, because this is how you fix your price point, all those types of things. So very important that you understand this. So let's get into the actual financing portion of this. We call it the 5 C's. And whether you're going to a traditional lender, a micro lender, going for an SBA guaranteed loan program, everybody is going to follow this kind of basic requirements. Your credit history is going to come into play. And again, if you have business credit, they'll look at that. If you don't have business credit, they'll look at your personal credit. Chances are they'll be looking at your personal credit anyway. So your credit score is going to come into play, those types of things. You want to make sure, obviously, that you have the best credit possible. If you do have not so great credit, that's not an automatic deal breaker for the SBA. We will look at the whole financial picture before we would decline somebody based exclusively on credit. And micro lenders are a good option for you if you do have not so stellar credit, because they're much more lenient in their requirements for that. I said earlier that you will have to pledge collateral. That is definitely going to be the case. Typically, it's going to be the business real estate, your pieces of heavy equipment, those types of things, any property that you have, any personal properties that you have, so your land and your home, vacation home, those types of things. The SBA does not require 100% collateral, but we do want you to pledge all the collateral that you'll have available. And we want you to show commitment. So this is going to be in the form of a down payment. Typically, if you are using an SBA loan, it's going to be about 10% down that you'll have to put. If you're getting a traditional bank loan, it's going to be about 20 to 30% down, in some cases a little bit more. So do be prepared for that. You will have to put down a rather large chunk of money up front. Character, of course, comes into play. Do you have a criminal record? Have you previously defaulted on a federal loan? Have you defaulted on your taxes? Have you been late on your taxes? All of those things can be kind of red flags. So you'll want to explain those also up front when you go to do the loan, so that the loan officer doesn't find it out after the fact. They're going to find out, so you may as well be honest and upfront from the get-go. And then cash flow, of course, that's your ability to pay back the loan, and that's where you have all of your financial projections being able to show that, how you are going to pay back the loan each month. Out of all of these, we've talked to a number of lenders, and they've pretty much said that the most important one of the 5 C's is going to be the cash flow, because at the end of the day, what they really care about is how are you going to pay back that loan. So let's talk for a minute about the SBA Guaranteed Loan Program. The SBA really is in existence primarily to be able to get capital into the hands of small business owners. As a new business, or if you haven't been in business very long, or for a variety of reasons, it can be hard sometimes to get a traditional bank loan. So that's where we step in. We guarantee the loan for the bank. And what that means is the SBA basically backs a loan between 50 and 85%, depending on the loan program, which means if you were to default on that loan, the SBA will step in and pay back 50 to 85% of that loan, which means the bank is only on the hook for, I'm bad at math, 15% to 50% basically. So they're not on the hook for the whole loan basically. So that makes them more willing to lend to small business owners and entrepreneurs, startups, that type of thing. It can also help you if you don't have a lot of collateral, or if you don't have a huge down payment to put down. We can be a really good option. Every bank in the US can do business with the SBA. Not all of them do, and they do have the right to not to pursue an SBA guaranteed loan with you. It is their choice whether to give you a traditional loan, or if they want to pursue an SBA guaranteed loan, they'll pick which program they feel you're best for, or they may kind of send you packing down the road, at which case you have to find another bank or work with a microlender. Two of the really good points about our loans are that our interest rate is capped. It's capped at a certain percentage over the prime rate, which right now is 3.25%. So you never have to worry about those predatory rates, or that the rate is all of a sudden going to be, jacked up really high on you. That's not going to happen. And then we also do not have balloon payments, which are those big payments that are due maybe like 3 years, where it's 30 or 40,000 or something that you then need to go and refinance because you don't have 30 or $40,000 on hand. You don't have to worry about that. That's not allowed under our loan programs. And then most traditional bank loans do have the right in the contract to call your loan in whenever they want. So if you think you have 30 years to pay back the loan, the bank could call you up and say, well, guess what? We need you to pay your loan in full in 2 weeks or in a month or whatever the case may be. That can happen. With our loan programs, though, that is forbidden. So that cannot happen. So that's a great feature. So getting an SBA loan program is pretty straightforward process. The first thing that we want you to do is get that business plan really ready to go. So get it, your financials well sorted, know your business plan in and out so you can answer questions, and work with our resource partners to do that. The only cost to you is your time. These are folks that are passionate about helping small business owners, helping you start or expand your small business. Take advantage of that. Nebraska is an extremely small business friendly state, so there's lots of resources available. Once you do that and your business plan's all ready to go, then kind of shop around. See which bank is the most willing to work with you. See which bank will give you the best interest rate, the best terms. Just kind of look around to find the best option for you. Like I mentioned, it's ultimately going to be the lender's decision what kind of loan that they want to give you. We get a lot of calls to the office saying that somebody wants to come in and get pre-approved by the SBA. You don't have to. In the SBA loan process, you don't actually work with any of the district office field staff. You will only be working with your bank. The banks work with us on the back end, but all of the loan, everything is done specifically between you and your bank because it is a bank loan. The SBA only guarantees it. We are not directly lending it to you. It is a bank loan. And then once you're approved by both the lender and by the SBA, then you'll work through the lender with all of the loan closing documents. So there are some restrictions to our loan programs. You cannot use them for absolutely anything and everything. We don't allow passive or speculative investments. So what we would consider being passive income would be buying, an apartment building and renting it out, or buying homes and renting them out, or flipping properties, because that would be speculative. So we don't allow those types of things. You can't start your own lending activity, no multi-level marketing firms. So this would be, like Mary Kay, Pampered Chef, that type of thing. If your business benefits primarily from gambling or from prurient interest, so if you need to know what that means, basically prurient interest would be kind of not family friendly. If you kind of get my drift there, we don't allow those types of businesses. And then we can't reimburse an owner for funds that they've already put into their business. So if your credit card bill is $20,000, say, you could not use an SBA loan to pay that credit card off. That's not allowed. And then while we are very, very supportive, of course, of nonprofit, charitable, and religious organizations, those folks are not allowed to utilize our loan programs. They are for-profit businesses only. Now, the only caveat to that is right now, the economic injury disaster loan and the paycheck protection program loan, those are open to nonprofits, charities, and religious organizations. This is kind of a special circumstance though with COVID. Normally that is not the case. And then of course, if you've already defaulted on an SBA loan in the past, or a student loan, or your taxes, then most likely you will not be eligible. This just gives information on our basic loan program. This loan does go up to $5 million. The guarantee percentage depends on how much money you are borrowing. If you're borrowing up to $150,000, the guarantee is 80%, 85%, which again means if you default, the SBA will pay the bank back 85% of that loan. Now, that's not to say you get off scot-free, because both the bank and the SBA will come after you for the collateral and that type of thing, but it gives the bank that assurance that they will for sure get at least 85% of that money back. We do have a guarantee fee with our loans between 2 and 3.5%. All of that money, the fee money, goes to kind of that big pot of money in the sky, and then that is what's used to be able to pay for the guarantees on defaulted loans. So great if you're a taxpayer, not so great if you are a small business owner, but that is why we do charge the fees for that. And you can use the SBA loan programs for pretty much any legitimate business purpose to expand, renovate, build something, buy something, inventory, franchise, payroll, all those different types of things. And then this is, we don't really need to go into this, but as you can see, our loans are fairly long-term and then can be either fixed or variable, and that the bank will set that. So the 7A is kind of our umbrella loan program. It's our, most popular one, for lack of a better word. The express loan is a great loan if you need money quickly. This, you do have to use certain SBA express lenders. These are banks that have worked with us that we've given delegated authority to be able to make decisions, so they can use their own paperwork. They don't necessarily have to involve us as much. So this is a much faster turnaround. In some cases, we're talking days or weeks. Right now, normally it goes up to $350,000. However, right now, due to COVID-19's impact on the small business world, that number has been increased all the way up to 1 million, and that will be true through the end of the year. 50% guarantee, use it for the same things that you would the regular 7A loan. Cap lines are great if you need things like working capital, if you're in a seasonal business or a construction business, if you're just looking to, say, fund one particular contract that you just received for your business, we suggest that you use cap lines. They can also be for general working capital lines of credit. Lots of good information about that. If you have questions, just contact me after the fact, after the webinar. We also have a 504 loan program. This is really what you would use if you are looking to purchase land and construct a building on it, or if you're buying a building, making extensive improvements or renovations, you would use this. This loan is a bit of a different animal. It's actually done between a larger down payment from you, so 10 to 20% from you. We guarantee 40% of the loan, and then the bank will do the remaining of the loan for the funding. And again, this can be used for fixed assets, construction, and renovation. And this is the only loan that actually has job requirements. So do keep in mind, if you're looking to expand your business, you do need to show that you are creating or retaining at one job per every 65,000. So it does get a little bit more complicated, but your loan officer will be able to help you with that. We've mentioned this in the kind of the beginning, but the SBA microloan program is great for folks that, for whatever reason, aren't able to qualify for traditional financing. We do work with 3 in the state of Nebraska. Nebraska Enterprise Fund, they cover the whole state. The Rural Enterprise Assistance Project, they cover outside of Lincoln and Omaha. And then Community Development Resources, they also cover the whole state, and then they are based in Lincoln. So with these folks, you might have a slightly higher interest rate. You're still going to have a credit check. They're still going to ask you to pledge collateral, but it likely will not be as much as you would for a traditional bank loan or for one of our guaranteed loans. So microlenders tend to be much more lenient on all of those types of things. And what's great about their programs is a lot of times, in order to utilize their loan money, their loan funds, they'll give you technical assistance. They'll help you with your business plan. You have access to free workshops, on credit building, all those types of things. So the microlenders are a great partner for the SBA. We mentioned Nebraska Enterprise Fund. This is their contact information. Again, they're located in Omaha. They also have an office in Oakland, Nebraska. But they do, as well as microloans, things like that business planning, cash flow, and financing planning, and marketing support and assistance. They're a great resource for that. They also do regular webinars through DoSpace. So if you haven't checked any of those out, definitely do. I'm sure Bree can give you the information on that. And again, if you have credit score challenges or you don't have a lot of collateral, they can help you work your way through that. This is the Rural Enterprise Assistance Center's contact info. Again, if you're outside of Omaha and Lincoln, this is a great opportunity. You can actually apply for their loans right online. And this is for micro businesses. So, the 10 or fewer employees, or sole proprietors, single owner employees, that type, or single owner businesses, that type of thing. And there's some more contact info for you. Actually, you know what? Just ignore this slide. I apologize. I thought I took it off of there. Whenever we talk about financing, I always have to make this statement because we get so many calls from folks wanting to know if the SBA has grants for small business startup or basic small business expansion. We do not. Small business grants are very rare and they're highly competitive if there are any. It's very difficult to get one. For federal grants, you can go to grants.gov and you can find things, but again, I doubt you would ever see small business startup on there. Those tend to be for more, research things or businesses that are for, green energy or solar energy or, just those types of more technical things. They're not for regular startup or mom and pop operations, those types of things. Sometimes your state, Nebraska Department of Economic Development, maybe your city, your local chamber, your county, they might have some sort of grants available or be aware of programs. So it's always a good idea to check with them as well. Another way that you can fund your business would be through angel investing. The Nebraska Angels are a group that are, particularly active here in Nebraska. With these, they do expect a high growth and a high return. So if you're starting up, they expect you to really gear up and generate sales quickly because they're going to want that return on their investment very, very quickly. Again, you'll need that solid business plan, and you need to be willing to give up some percentage of control in exchange for that funding. It's kind of like Shark Tank, right? Where they'll give you $50,000 for a 10% stake in your business. So now it's not just you calling the shots. You also have that second party that you have to be running things through. So that's where you really have to decide, do you want to be only in debt or do you want to receive more money, but you're giving up control of your business? The angels or the investors will want a lot of times active involvement. So they want to be calling the shots too. They want to be involved in your day-to-day. So just make sure that you are okay with that before you would go down that road. So some of the pros for working with angel investors is, obviously you get capital. They might have different kind of investment agreement terms, a little bit more flexible. They can also be mentors to you and provide business guidance, mentoring, coaching, that type of thing. The cons of that is that, you may be giving up a lot, a share of your profits, certainly shares of your ownership, those types of things. They might want more than you can give, and they might want to be kind of micromanaging or at least more involved than maybe you would want them to be. So just be aware of that. Venture capital is basically angel investing, but at a much higher level. So we won't talk too much about that. But it's typically on your high growth companies, and they'll be involved for quite some time, just for that long investment period of time. Crowdfunding is getting to be very popular. It has been around for quite some time now. If you're not familiar with this, it's things like, GoFundMe, Rocket Hub, Kickstarter is one of the most common ones. And there's two types of crowdfunding. The most common, I think, is a gift. And this is where people who invest a certain amount of money will get a certain item. So for like an investment of $10,000, you're going to give them a t-shirt with your logo or whatever the case may be. You set that up. Or you could also do shares in exchange for money. again, you want to be careful with that because you're basically giving somebody from the general public, ownership in your business. So make sure that it works for you. The pros with this, if you are looking for funding for something that might be more unconventional, we're seeing a lot of those kinds of businesses these days, or if you want to do a movie or something like that where you're trying to make that money, crowdfunding is a great way to go. You can create all kinds of awareness, social media campaigns, publicity about your business, and it can happen really quickly. You're setting a goal, like a timeline for when you need to receive that money. So if you want, say, $30,000 and you need it in 3 months, then you set that date. If you do not make that full $30,000 at the end of 3 months, then you don't receive anything. So nobody's credit card is charged, right? You don't get any money. So that's kind of a con of it. It really is all or nothing. And then you are needing to show positive results in a short time. And you also need to make sure you're providing whatever you promised the donors. So, that t-shirt or that frizzy with your logo or whatever it is, that is going to cost you some money. So you want to be aware of that. And of course, whatever platform you're using will also take a percentage because of the funding that you receive. So that is kind of the end of the formal presentation. So this is just a couple of things to remember from this. So we have a little bit of time left. So does anybody have any questions or want to go back to anything? Feel free to let me know.
If anybody has questions, they can go ahead and type them in the chat.
And there's my contact info too. So if you think of something or want further details on something, by all means, just call or email me, reach out, and I'm happy to provide your information or connect you to the resource that can help you best with that. Well, with no questions, at least not right at this present moment, I do want to thank everybody for being a part of this webinar. Hopefully it was some good information for you and you enjoyed it. And I would definitely like to thank DoSpace for having me be a part of this.
Yeah, thank you for that, Elizabeth. You did mention Nebraska Enterprise Fund. If any of you are doing the PPP, Nebraska Enterprise Fund is on Monday the 22nd talking about how the PPP can be forgiven. So I've posted a link to that in the chat panel if anybody is interested in attending that. And if anybody, if no one has any further questions, I think that we will go ahead and end just a little early today. Thanks everybody for attending.